In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar and investor sentiment. But before I continue to that video, given that it's tax season, I do have an affiliate link for Free Tax USA. I do get a small kickback from that, but no extra charge to you guys. It is a free tax service. I've already compared it to TurboTax and filed with them in the past. Same numbers I got when I compared them before filing. And it's free filing for federal, and then the state tax is $15. But overall, it's basically for free besides the state side, which is pretty awesome because TurboTax obviously charges you for the software. Plus, they charge you about $20, I believe, for the state tax from what I've used them before, and $25 if you file closer to the filing date for the state tax. So it saves you guys money. And again, it got me the same numbers as TurboTax, so it's pretty beneficial. And then thanks again for the link, using the link down below, because it does support the channel in terms of, like I mentioned, affiliate link / kickback. But in terms of investor sentiment, going with the whole entire market, again covering Dow Jones, NASDAQ, and S&P 500, we see the investor sentiment, bullish sentiment, dropping week after week. So for February 12th, 2025, we're at 28.4% bullish sentiment, again dropping week after week, and lower than the historical average at 37.5%. And then we're looking at the bearish sentiment, it's at 47.3%, increasing week after week and higher than the historical average at 31%. And the crazy part is too, the 1 year bearish high is currently this week. So we're at the one year bearish high overall. And it's kind of unfortunate. What's happening is because there's the tariff mix and all stuff, and personally, I think it's needed, obviously, in terms of trying to figure out what's the best economic side for the U.S. side. But it is on pause for Canada and Mexico, but not on pause in the China side, within China and the U.S. But we will see how the markets assess it as we get to them. And at the same time, there's a little bit of a mix-up. I'm going to go over the economic calendar, but the mix-up is the Fed stated in the previous weeks that they are, for the time being, not slowing down their interest, or not lowering interest rates and slowing down the rate of cuts due to their worried that the inflation numbers might start going up given the current administration right now for the time being. I think personally they're overreacting a little bit, but that's just my opinion again. And this week on Wednesday, February 9th at 2 p.m. Eastern Time, minutes of Fed January FOMC meeting will be coming out. And I'm assuming the market's going to try to wait and assess that. The reason I'm saying that is, before I get to the rest of the economic calendar, going through the technicals, if you look at the 1 month, 3 month, and 6 month for the Dow Jones, NASDAQ, and S&P 500, they're kind of showing a little bit of a downside, potential headwinds. But if you look at the 1 month, or 1 year, 5 year, and all chart, they're all almost pointing to the upside, except for the Dow Jones 1 year chart. It's a little bit on the downside. I'm going to go over them quickly right now, but that's basically for the general, like in terms of high level, what's going on. But if we look at the S&P 500, specifically ETF SPY, ETF for the S&P 500, same thing, just different ratio. Like I've shown in the past, we had an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, and then 2 major crashes. We are a little bit past the mid zone, or quite a bit. We do have more room to go to the upside. Not necessarily guaranteed to be the case. We've been in the mid zone before and dropped down. But if you go off of the 1 year chart right about here, and you see the MAC line, it is in the bullish movement. Volume has been predominantly more on the buy side, bounced off the 50-day moving average as well. And if you follow this, it looks like more upside could be coming. Besides for the fact with 1 month, 3 month, and 6 month potential headwinds and the FOMC meeting on the Wednesday. Now, if you look at the 5 year chart, MAC lines is in the bearish movement, but potentially crossing over to the bullish movement. Plus, again, like I stated, the volumes are more predominantly on the buy side. And then the alt chart is pointing still for the bullish movement and potentially could be curving up. Now, the thing is, though, if we were to get pulled down, I'm expecting the 50-day and 100-day moving average to be providing us support like we've seen in the past for the time being. And again, we closed at $609.70 for the S&P or SPY ETF for the S&P 500. And the 50-day moving average for the 1 year chart is at $599.01. And the 100-day moving average is at $590.95. Now, can we go lower? Obviously we can, but I personally don't think that's going to happen, but I'll keep you guys updated as we go. I am not a professional though, so please do your own due diligence and research before buying and selling. And then if we're looking at QQQ, ETF for NASDAQ, basically almost the exact same thing. If we look at the 5 year chart, you can see dating back since 2010, upward trend support, upward trend resistance, upward trend support dating back since 2010, false breakouts or full breakouts almost, but bounce off support as well. 2020 to 2022, came back underneath, all stuff, etc. But 1 year chart, if you see it, and then by the way, we're above the 2010 upward trend resistance line for the time being too as well. Plus bounced off the 50-day moving average with the MACD line pointing to more upside potentially with the bullish movement right about here we see with the MACD line, and the volumes have been predominantly more on the buy side as well. So in a way, a little bit of headwinds with the 1 month, 3 month, 6 month like I mentioned, and then if everything goes well with what's stated by the FOMC in terms of the meeting minutes that come out, and the market takes a while, then I think we should be bouncing back up. But potential headwinds with the tariffs back and forth. Potential. If we look at the 5-year chart, MACD line is just like the S&P, where it is in bearish movement still, but more to the potential bull side versus the S&P 500. By the way, QQQ closed at $538.15. And if we were to get pulled down, I would more so think in terms of the 1 year chart, we'd be bouncing off the 50-day moving average that we've seen multiple times. Plus this upward trend resistance line dating back since 2010 seems to be providing decent amount of support, I would state. But essentially around hovering the 50-day moving average, looking at the price point of $522.58. Again, we closed at $538.15 on the Friday. Markets were closed on the Monday. And then the 100-day moving average for the 1 year chart, this is for the 1 year chart, like I stated earlier, hopefully I did, is at $509.45. Again, that's $509.45 for the 1 year chart, 100-day moving average. And then can we go lower? Obviously can. I'm not expecting it to be the case unless something drastic happens, and I'm not expecting that, but we've seen it before in the past as well, going to the 200-day moving average. And then the alt chart, just like the S&P, it is basically in the bullish movement, potentially going up to further upside, more predominant on the NASDAQ, I would say, because we see the solid green tick versus just a light shade of green, like a continuous light shade of green like the S&P. And then for the Dow Jones is a little bit different. 1 month, 3 month, and 6 month is showing headwinds / downside potentially. But if you look at the 1 year chart, it is a continuation potential of the downside. Now for the Dow Jones though, we are in the all-time high zone right about here, and we've been there quite some time. The reason why I'm mentioning that though is because we've been testing it basically, the previous all-time highs, which was back in, give or take, early December 2024. And we could be going up there again. And then if we do pass it, it could provide enough momentum to, once we break through it, continue to the upside, especially since the NASDAQ is showing more strength to the upside overall. And if that is the case, that could provide enough momentum for the Dow Jones as well once it breaks it to continue the upside, especially since if you look at the 5-year chart, it is in the bearish movement, but it could cross over to a bullish movement anytime, pretty much anytime soon. And plus the previous volumes, not necessarily volumes, but candles have been pretty strong greens overall. And the alt chart is the same as in S&P and NASDAQ. It's predominantly basically in the bullish movement basically, and continuous upside could be coming. Now in terms of the economic calendar, just to quickly go over it, Monday the market was closed, but just to show you guys what you guys potentially missed was 9:30 a.m. Philadelphia Fed President Patrick Harker speaks. 10:20 a.m. Fed Governor Michelle Bowman speaks. 6 p.m. Fed Governor Christopher Waller speaks. On Tuesday, February 18th, at 8:30 a.m. we have Empire State Manufacturing Survey for February. 10 a.m. we have Home Builder Confidence Index for February. 10:20 a.m. San Francisco Fed President Daly speaks. 1 p.m. Fed Vice Chair for Supervision Barr speaks. And on Wednesday, February 19th, 8:30 a.m. we have the following two: housing starts for January, building permits for January, and then at 2 p.m. like I stated, minutes of Fed January FOMC meeting. Again, be on the lookout for that. The market will definitely react to that. And then at 5 p.m. we have Fed Vice Chair Philip Jefferson speaks. Then Thursday, February 20th, 8:30 a.m. we have initial jobless claims for February 15th. 8:30 a.m. we have Philadelphia Fed Manufacturing Survey for February. 9:35 a.m. we have Chicago Fed President Austan Goolsbee speaks. 10 a.m. we have U.S. leading economic indicators for January. 2:30 p.m. we have Fed Vice Chair for Supervision Barr speak. 5 p.m. we have Fed Governor Adriana Kugler speak. And then for Friday, February 21st, at 9:45 a.m. we have S&P Flash U.S. Services PMI for February, as well as S&P Flash U.S. Manufacturing PMI for February. 10 a.m. we have Consumer Sentiment final for February, as well as existing home sales for January. And at 11:30 a.m. we have Fed Vice Chair Philip Jefferson speak. as well as San Francisco Fed President Daly opening remarks. So that's basically it. Mainly look out for the Wednesday for the FOMC meeting minutes that come out. And that's basically it. Hopefully you guys enjoyed the video. Hopefully you guys liked it. If you did, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. If you guys do want to be notified when I do upload my next video, consider following and subscribing to be notified when I do. I upload them weekly, and that's basically it. Thanks again for watching. Take care, God bless, and peace.